Hey, everybody, thank you very, very much. Thank you for joining us for a Wednesday webinar, and I'm very, very appreciative that you're joining us again to get breaking news about an hour ago that was really, really vital for sellers. And I normally won't go live twice in a day because I don't want you to get more sick of me than you might already be. Today, I am blessed to have Cyndi Thomason available today to talk to you about knowing your numbers. You have to know your numbers. If you want to make money, you have to know what's profitable. You have to know what's not profitable. You have to know what's most profitable. You have to know your numbers. So Cyndi, from bookskeep.com, could you just tell a little bit about yourself and how you ended up working and focusing on e-commerce sellers?
I sure will. And thanks for having me, CJ. Started a bookkeeping business 4 or 5 years ago because I wanted to stay home with my daughter, and got introduced early on to Profit First. And through my work with Profit First, just saw how it really benefited my clients. And in my work with Profit First, I got a client base, 1 or 2 clients initially that were e-commerce sellers. And those folks really did a lot of referrals for me. And through referrals, we're up to over 100 clients today that are e-commerce clients. So
I got to tell you, that's huge. And I love it. That's actually very similar to how Ashlyn Haddon, I don't know if you know her, but she specializes in selling insurance to e-commerce businesses. And she's tremendous, where she jumped in and there was no one else that spoke the language. Just like for you, I don't know anyone else who actually speaks the language of e-commerce when it comes specifically, to bookkeeping. So I think it's really cool. And there's no better referral than one of your clients sending their friends and colleagues over to you. So I think that's absolutely huge. Dude, tell me a little bit about the difference between the people that we deal with every day and the bookkeeping for kind of traditional brick and mortar business people.
Well, brick and mortar has inventory too, but most of the time they can see it. They understand their inventory is kind of tactile. Whereas my clients, they many times never see their inventory. Maybe they look at some samples early on or look at what gets returned. So I think that's huge. I think our clients are real tech savvy. They're very comfortable using data, getting the reports off Amazon and other software, and brick and mortar stores a lot of times are not. So they're also really looking for a lifestyle, a little bit different kind of lifestyle. Most of my clients are wanting to be mobile. They're wanting to, a lot of times it's a second career for them. They're wanting to shift their focus and be able to travel and work from anywhere. And certainly a brick and mortar store ties you down.
I got to tell you, I see the same thing. But what I find remarkable is that you have sellers who are so data driven, and Amazon gives sellers such incredible tools to monitor themselves and such great metrics. They also use the metrics to screw sellers over left and right. But you can really see how much you're selling and when and how long it's staying in inventory. But I'm still aghast when we talk to sellers and they don't know the cost, the full cost of a particular product, or they don't know where their 80-20 rule lies. Mm-hmm. I think it's vital for a business where people are so data driven, not to know their bottom line numbers is just scary. So how do you work?
Part of it, I'm talking over you, sorry. I think part of it is there's too much data. There's just so much out there. What's the important thing to pay attention to?
So how do you get started? When you first start working with an e-commerce business person, and actually Cyndi and I are going to talk a bit about my firm's potential needs, okay? Because there's so many different expenses that didn't exist in traditional brick and mortar, so many different sources of income, where the money comes from, Payoneer, payability, credit card processing, different fees, for Amazon sellers to pick, pack, and ship, FBA losses that you guys face every day. So when an e-commerce seller contacts you, all right, Brandon Andrews, thank you very much for, let me make sure we can show this thing here, because Brandon, who is a tremendous thought leader, okay, the privatelabelInsider.com. The privatelabelInsider.com is the #1 monthly publication that private label sellers should be reading. So Brandon, thanks for watching, and thanks for that huge compliment to Cyndi.
Thank you, Brandon.
Huge, what do they call it? Throwing shade is bad. This is just a good thing. So, all right. So when an e-commerce business person, whether it's an Amazon seller or somebody else involved in e-commerce, They reach out to you for the first time. What sort of questions do you ask, and how does someone get started?
Well, we need to understand what platforms they're selling on, what kind of merchant processing systems they're using. You know, are they selling on Amazon? Are they selling on their website? Just where is the money coming from the sales? Because capturing the sales data is huge. So many times we take over a client's books and they just put their net deposit on there, and they've missed all that data of what happened at Amazon. So we really want to capture all that data in their books, because there's a lot of good information there that they should be.
Let's take a huge thing. Let's take a huge thing about data. Expenses, okay? Expenses and losses. If Amazon is overcharging you, that really sucks. But whether they're charging you the appropriate amount or they're charging you too much, right? That is a deduction. That puts money back in sellers' pockets.
Right. And you know, sometimes when we start analyzing their books and we see that their gross margins are just non-existent, we have to dig in with them and say, what the heck is going on here? And many times it's situations, well, one client in particular, they had their dimensions wrong. That changed all their fees. Their fees were exorbitant for the product they were selling. They were really basically getting very little from Amazon. It wouldn't cover the cost of their product. And, you know, knowing your numbers allows you to dig in and understand when you've got a problem like that.
I got to tell you, knowing your numbers is vital, because you're going to know, one, if you're actually making money or not, or if the fees are just taking away your entire profit margin, or recognizing where you should be putting your money and pulling out. If you're making, 1% return on your investment, it's not really worth your while. Where if you're making on another product 35% after all the costs, that's a product you really want to expand into.
Exactly.
So you get the seller on the phone, or you start emailing them, you start getting the information. How do they get the data to you? Are you logging onto their account? Do you have an API? Are they feeding it to you and filling out some type of questionnaire? Like how's the meat and potatoes of this process work?
Well, when we first start talking, they provide us their information. Many times they have books already. They give us access. We go in and we can see what's going on and what needs to be fixed. If they're not comfortable with that, then there's some questions that we have about, what are their channels that they're selling on? How many transactions are they making? How many bank accounts? How many credit card accounts? What other kinds of loans do they have? Just the general history and present state of what their books look like. Once we get that,
I love tossing this back and forth with you, because I'm a business lawyer. I'm an entrepreneur's business lawyer. You mentioned loans. Interest is deductible. Okay. I have a particular pet peeve I'm going to interrupt you with, and I'm sorry if I bounce all over the place.
No worries.
How are you handling it when a seller has sent in 1,000 pieces or 10,000 pieces, and Amazon has lost 10% of them?
Well, our clients have to communicate with us about that, first of all, because we don't have that knowledge directly. But once we have that, then we can book it as a cost of goods, because if it's not available anymore to them to be sold, and it's truly lost and they're not going to get a refund, then we can book it out of inventory into cost of goods. If it's something where we expect that they may get a refund, then we want to keep it in on the balance sheet until that's all resolved. It wouldn't go on the P&L.
But at some point, and your busy season must be coming up, okay? Tax season is getting here. Right. When you write that off as a part of your cost of goods sold, it lowers your profit, which lowers your tax bill.
Exactly. Absolutely.
Okay? Bookkeeping is all about identifying where you're making your money and keeping more of it in your pocket.
Amen.
All right. I took a chance. I looked at your blog post. Okay. Before I came on, I looked at your blog post, and the year-end accounting checkup I thought was great. Okay.
Thanks.
Tell us about what you do at the year-end accounting checkup, specifically for sellers. That's mostly our audience, new sellers, experienced sellers. What's the end of year accounting checkup?
Well, we first of all want to be sure we got all the revenue captured. We've got all the expenses captured. And one way to do that is by making sure that all the accounts are reconciled. And I want to be real clear about what that means, because this is a question I get a lot with clients. Most of the time, clients think that when they've got their bank account feeding into their QuickBooks or Xero, and they're accepting and coding those transactions, that they are actually reconciling. And that's not right. To reconcile, you actually have to go back and look at a bank statement online or a piece of paper and tie that number back to a bank's balance. And our clients don't do that. When we first take them on, they don't do that. And that's huge, because if you don't match up to your actual bank account, then you have no validation that your numbers are correct. So
that is entirely right. I mean, listen, I'm a lawyer, okay? And we write the best plans of action and appeals on the planet, and we handle intellectual property, but I cannot keep my own books. Okay, so we have an accountant who's here, because just downloading the data, all you're doing is downloading errors. You're downloading mistakes. And credit cards too, right? Like I don't read the points guy. I read the points guy every single day, and I use credit cards for as much as possible. So I want the points, but you can't even use that data. That has to be reconciled also.
It does, because, as much as we'd like to think that link is going to be good forever, it gets disconnected. And when you connect it back, you've got duplicates or you've got gaps. And those two things have to be validated. And if you don't validate it, if you don't validate your loans, you don't have confidence in your books. So year end is huge to get your books reconciled, validated. Also making sure you got your inventory numbers right at year end. Your inventory just affects so much. You've got to have that number right at year end for tax purposes.
And also, we're a huge advocate for focusing on what they do best, which is identifying products, selling products, running the dashboard, seeing the trend for next year, and, sourcing and that sort of thing, not bookkeeping, not accounting. Okay. And the account should be giving you information. Say, hey, listen, you've got $10,000 of this inventory. You've been carrying it for 6 months. Stop buying it or liquidate it. Get the cash back out. Right?
Yeah.
Okay. I also read one of your articles about 1099s. Okay.
Mm-hmm.
There were 6 things before you issue a 1099 that I thought was really interesting stuff. Because even with my accountant here twice a week, right? We go back and forth. Do we need to issue a 1099 or don't we need to?
Yeah, it's so easy if you will have your vendors fill out a W-9. I mean, it's available on the IRS website. Just anybody that you're paying that possibly could need a 1099, have them fill out a W-9, and that'll tell you whether you have to pay them or not, or file a 1099 or not.
And it's a lot easier. It's a lot easier to get that when they're either trying to sell you goods or services, right? Mm-hmm. Or when they want their check. Say, hey, no problem. The payment's coming in 2 seconds. Would you mind just giving me the W-9 right now? Okay.
Right. Exactly. And the threshold for a lot of businesses is $600. And you may think when you start working with them, well, I won't hit that threshold, but then you do. And then after there is an established vendor, you've kind of let the horse out of the barn, so to speak. It's hard to go back and get it. It's just easier to pay them. And then you've got to go back and do cleanup at year end. And you're under a deadline because those 1099s have to be filed by January 30th or 31st with the IRS and with your vendors.
And if you don't, there are always interest. There's always penalties with everything with the IRS.
Yeah, exactly. And, you'll get a letter because they're going to cross match it with their database, and you'll get a letter saying that you didn't withhold properly, or, that you've got to change your process.
Well, I've got some questions. I've got some questions for you based upon our experience here and some of the issues our clients have faced. Before I dive into my questions for you, what's the next thing you think sellers need to know about? We know how they get started with you. We know that the end of year has to be cleaned up and before it's an emergency. We know 1099s are vital if you want to write it off, because if you don't send a 1099, the deduction could be challenged, right? Mm-hmm. And worse, also 1090. If you don't 1099, they could be deemed an employee, which creates a whole nother shitstorm.
Yeah. The next thing really does center around profitability. And that's, I think, one of our primary strengths, and one of the things that we really help people with is just understanding how not only where their business stands, but what they need to do to get profitable. And that's that's one of the main focuses that we have with our clients.
How do you do that when you have sellers who are selling all different products and all different fees? How do you really examine their profitability in terms of not only just FBA fees, for example, but their advertising, their marketing, their travel? How does that all work into it?
Well, we use a cash flow management system called Profit First. And so basically what we recommend is that they have multiple bank accounts, so that not all of their bank accounts are commingled. And Profit First was written by Mike Michalowicz, and based on my experience with it with e-commerce sellers for the last 4 years, he and I worked together, and he gave me a license to, make it specific for e-commerce sellers. And you can use multiple bank accounts for specific purposes, like inventory, if you've got payroll, but also for standard things like profit, to make sure that you're setting aside money for your profit, to set aside money for taxes, to set aside money to pay yourself. Because when everything is all lumped into one big bucket, what happens is you look at that bucket and you think you've got lots of money. You don't, in your mind, separate out, well, half of that's got to go to inventory, or I know I've got a big insurance bill coming up. I better set some of that aside for insurance. It just looks like a big bucket of money. And there's this behavioral law that Profit First is based on called Parkinson's Law, which basically says you use what you got. So if you see, my grandfather used to say that money's burning a hole in your pocket. And it's the same kind of thing. If you see a big balance out there and you don't see it separated out for a specific purpose, you can get pretty creative about things that you might want to do, like launch a new product or hire somebody else or whatever. People get really creative about how they want to try to spend that money. And then a big inventory bill comes due the next month, and they're sitting there without money to pay it and are looking for things like a credit card or an Amazon loan or Cabbage loan or whatever to be able to make that payment. So Profit First, that's the piece of it that we like to help our clients with, because it gives them a dashboard just by looking at their bank account to help them understand where they're at from a cash perspective.
So are you suggesting people use different bank accounts for budgeting and also for project management?
Yes.
I got to tell you, I agree with that, especially for, I think, the smaller sellers, because you want to say, okay, I'm going to go into this new product line, right? Or this new area or this new category, and we're going to put in $20,000 or $50,000 or $100,000 and keep that entirely separate to see whether or not that project, is or is not profitable as a standalone project. Where if you do have everything in one bucket, it definitely makes it a bit more complex in terms of budgeting and keeping your hand around that particular launch. Because then you also could end up, like you said, kind of taking from Peter to pay Paul, and all of a sudden a big bill comes in for the business and you just don't have the capital anymore. And credit card financing is not a great way to go. We use credit cards solely for the points, okay?
Yeah.
So if I can pay a bill, if I have my voice over internet phone system hooked up with my Cathay Pacific card and gets me upgrades from, economy to premium or premium to business class, right? It's great. But those credit cards, you got to pay off, or else the hole will grow really, really quickly. Okay. So not really a good way of doing business long-term, not on credit cards. Have you dealt with Amazon loans before?
Yeah. A number of our clients use Amazon loans.
Well, it's really interesting you bring that up. Okay. Because Amazon has been chasing people individually, okay, for the loans without any personal guarantee. So if anybody of your clients has this problem, or anyone who's watching this has this issue where Amazon is trying to compel you to pay a business loan where you didn't personally guarantee it, give us a call. We have a lot of experience in that area, especially if Amazon made the loan to you and then they took over the buy box, they started competing with you and made it impossible to pay that loan back, okay? Give us a call. So it's really interesting you brought that up. I think it's a disgusting thing that Amazon is doing, where they're making loans, putting sellers out of business, and then chasing them personally without any personal guarantee. Okay. So
I'm glad to know about that service that you have, because I didn't know that was an option for them, but people do get in trouble with those loans.
All right. What about, how do you account for all the different fees? I mean, you're getting the data from the clientele, but a lot of times your clients and mine are getting overcharged by Amazon. Are you involved in identifying those overcharges?
No, we don't do that. We do break down the detail in their books so that they can see trends. I want them to be able to look at their P&L month by month. And certainly if we see one month's fees totally out of kilter with another month, we will call that to their attention. But we don't have our hands that deep into the information to know if that's a legitimate fee or not. But I think having the fees broken down in detail on the books is important so that they can see if some kind of trend is changing there.
You know, I'm going to put a website up. Then we're going to talk about your book in a bit. Okay. All right. So if you see a trend and all of a sudden your FBA fees are like going through the roof, there's something going on. Okay. Or if you just need an account reconciliation, this company, sellerstrategies.com, was founded by a tremendous Amazon seller. Okay. His name is Rich. And if you contact sellerstrategies.com, let them know CJ sent you over, and you should only speak with Rich. Nobody else. Speak with the owner of the company. Speak with Rich at Seller Strategies. What they do is that when a seller suspects that they're being overcharged, they go in and they find the overcharges. Or if you're not sure, you just want someone to look at your account, reach out to them, and they do what's called account reconciliation, and they can find money for you that Amazon has been overcharging. And they don't do a buckshot approach. They do it very, very specific to avoid the problems that other account reconciliation companies have had in the past. So, Cyndi, if you see a trend for any of your sellers, or if any sellers out there want to have their accounts checked, this is the only company that we suggest when it comes to account, reconciliation.
Awesome.
Okay,
Thanks.
so let's talk about your book. Okay, now I love that you're using Profit First. I think it's a terrific book. Let's talk about yours. At least if I can blow it up a bit. It's on the screen here, and I'm not the most tech savvy guy. There you go. Make 2019 your year. I love it. Permanently profitable. Okay, permanently profitable. Let's talk about the book a bit.
Okay. Well, it really is based on the principles from the original Profit First from Mike Michalowicz. As I said, we've been implementing that for our e-commerce clients for the last 4 years, and have learned some things like our clients really do like to use credit cards. And while that's not really popular in Mike's book, we understand that our clients aren't going to go away from that they found a way to work with it. But using some bank accounts along with those credit cards, you can start to see, for example, if you have a bank account for inventory and a credit card that you use to buy inventory on, you always want that bank account to have enough money to cover that credit card. Now, a lot of our clients say, but I always pay my credit card off on time, but they're depending on sales of future products to pay off that past inventory. And there's a difference there. And where that gets people into trouble is a lot of my clients like to use their Amex to pay for inventory. And Amex will let you go over. And I've had clients that have gone over significantly and got ready to place an order for inventory, and Amex has cut their limit in half. And it was $300,000 and now it's $150,000. And now they don't have the money to be able to buy the inventory to pay off that bill. So you got to stay ahead of it. If you're using credit cards, which I know people want to do, be sure you've set the money aside to pay that. Not that you're going to have the money next month based on sales, but that you've got the money now to pay for that order that you've just placed.
I got to tell you, I agree 100%. And if anybody out there is thinking about getting advances on their future sales, from their credit card companies, I would advise you don't do it. Don't take from Peter to pay Paul, and not from Peter in the future. If you're ordering, you need to be able to cover it, or at least have the ability to cover it without going into HOP, without going into debt. Okay. No one ever went out of business making a profit. Okay. Yeah, I forget who made that saying. I don't know, Milton Hershey. No one ever went out of business making a profit. And maybe your profits need to be a bit smaller, so you don't have to borrow money that you may not be able to pay back, but you need to maintain profitability. And keeping good books is a huge pillar of profitability. It's absolutely vital. You need to know your numbers. You need to be able to pay for that inventory, before you jump in, okay? Because bad things can happen. You could have bumps in the road. So I love that piece of advice of having separate accounts and making sure you have the money in the account to pay off the credit card bill. You get the points, but you don't end up in a hole, okay? I think that's absolutely vital. What do you think sellers need to know, as we get towards the end of this webinar? What are the takeaways? What do sellers need to know?
Well, the biggest thing that I say for people that are thinking about implementing Profit First is, if you don't do anything else, do two things. One, open an account for inventory and get your inventory cash flow separate in your bank account from your other expenses. And the other account you need is a profit account. You've got to start to be permanently profitable. You have to commit to some percentage of every dollar that you get in goes into a profit account. And once you do that, those funds are set aside that you can then use those dollars to reward yourself. As business owners, most of the time, we think of ourselves last in the equation. We've got to pay everybody else. Well, the reality is, if you're paying everybody else and you don't have enough money at the end of the day to pay yourself to be profitable, then you're setting yourself up to be, with a business that's not sustainable. And by doing those two things, making sure your inventory is covered, making sure your profits are covered and separated out, that really will start to put some pressure on your operating expenses. And while nobody likes that pressure, the rewards are huge. The rewards are, you get innovative, you get efficient, and you get frugal. And if you're not employing those methodologies in your business, in the way you operate, you can bet somebody else is, and they're the ones that are going to win at the end of the day.
I got to tell you, you're preaching to the choir. Now it's the first full business day of 2019, and I've got my list. And every week I have certain goals, small goals and larger goals. And one of my goals is, of course, to make sure this firm continues to grow by letting the world know how awesome we are, and also by having fantastic people like you, available to our clients, and that we're available to yours, but also cutting costs. Okay. Like I'm paying like a half a dozen different online software companies to do things that I think I can consolidate. So growth and also cost control, and only spending what you can. I also think that sellers have a really bad habit. Sellers have a really bad habit of not paying themselves and not recognizing their own value. I mean, listen, selling online, being an entrepreneur is a lot of fun. It's a great adventure, but you're also giving up working someplace. And that means you need to draw a salary. You need to take money for yourself, and the profits for the nice things for yourself, I think, is on top of that. Okay. Yeah. So I think every seller should be drawing money out every single week or every 2 weeks as you get paid, and paying yourself. And then also, I love this profit fund that you can then give to yourself as a bonus, or use as a pet project, or invest in something new. And I love that each project has a separate account, and you can identify the profitability of that account and of that product line. I think that's huge advice, especially for the sellers that are either jumping in right now, or the smaller sellers who are still kind of learning their way and need to make sure they're profitable in each particular product line. And it's not as much a pain in the neck as it sounds. You can have a separate account that monitors that product. It makes it really easy, and the banks are happy to have your money and have you have multiple accounts.
Yeah. And another place where I see sellers get into trouble is with advertising. And so having a separate account for advertising is helpful too. Even some of the larger clients that we have, the larger sellers, it's hard to know how much money do you spend on advertising. And if you take a percentage of what you get in and put it into an advertising budget, and you start to see that you're spending more than what your budget, your bank account is going to allow, then you get real feedback really quick that maybe what I'm spending on advertising is not giving me the return that I need. Because if it were, then you'd have plenty of money in that bank account. And so setting up an account for advertising has been a huge, just kind of a metric for our clients, because they can see it. You get all kinds of data from, Facebook, from Google, that tells you, and from Amazon about how your advertising is working for you. But what it really comes down to is your top line revenue increasing? And if it's not, then your advertising dollars not getting you the return that you need.
And it doesn't mean you have to stop. You just need that information to reevaluate.
Yeah,
you
need to know where.
Right. It hasn't worked yet, but I'm a true believer in this, so I'm going to double down. But you need to know whether it's working or not so you can make good business decisions. And again, I'm not saying sellers always have to be right. You are not always going to be right. No. Sellers are going to pick a bad product. They're going to pick a bad advertising scheme. It's going to happen. That's the lifeblood of being an entrepreneur. Mm-hmm. But you at least need to be able to track it so that you can make educated decisions. I think that's a huge, huge, huge takeaway. I want to address a couple of things. Okay. Cyndi, is there anything else you want to add as we wrap it up?
No, I think we covered it all. Thank you.
Okay. First of all, I want to thank all of the sellers out there for supporting the Ty Lewis Campbell Foundation. Okay. On practically every webinar, you guys have put up with me telling you to shop through Amazon Smiles. Okay. To asking you to please pick, I'm trying to type his name right now, this foundation. Okay. I can't spell foundation, F-A-U. There we go. The Ty Lewis Campbell Foundation. So I want to thank sellers all over the world for shopping through Amazon Smiles, for picking the Ty Lewis Campbell Foundation. And for those of you who don't know what I'm talking about, Amazon has an incredible program, okay? Absolutely incredible, where when you're shopping on Amazon, you can use a program called Amazon Smiles, and then allows you to pick a charity of your choice, and Amazon then donates a small portion of your purchase price to the charity. It doesn't cost you anything as the buyer. It doesn't cost the seller anything. Amazon does this, and it's really, really great. Thank you, Amazon. Thank you, Bezos. And if you're shopping on Amazon, please use the Amazon Smiles program. Please pick the Ty Lewis Campbell Foundation. All they do is raise money to find treatments and hopefully a cure for pediatric cancers. Mm-hmm. So, Cyndi, thank you very, very much for joining me. Thank you for teaching sellers the importance of their books. Thank you for being available to them. I'm going to put your email back up or your website back up. Or how do you prefer sellers reach out to you? Email or the website?
The website's great because it'll ask a few questions so that when we get back in touch with them, we already know a little bit of information.
So it's bookskeep.com. Bookskeep.com. This is specifically bookkeeping for e-commerce. So thank you very much, Cyndi. Thank you, everyone, for watching us. Please share this video. Please like it. And we're doing a big push to join our YouTube channel. So if you haven't already, please subscribe to it. Thanks a lot, Cyndi, and we'll talk really, really soon.
That's great, CJ. Thank you so much.